Hi, my name is Samuel Tucko. I'm the VP of Tax Planning at Miser Wealth Partners, and I'm excited to bring you another episode of Tax Talk with Sam. Okay, to wrap up, what we're going to do is we're going to walk through an example to show how a tax-wise filer might make a decision based on using a standard deduction or itemizing their deductions. Ready? Okay, let's quick walk through an example in a scenario where it might be better to either take a standard deduction or an itemized deduction. But at the very least, it's worth walking through it and seeing which comes out with a larger. For this, we're going to have a couple. We're going to have Joe and Jane, okay? And we're going to say that at the beginning of 2022, they purchased a house with a loan of $500,000 with a fixed interest rate of 3.25% annually. And Jane runs a business with sales tax equaling $8,000. And we're going to say that they're a charitable couple and they give to charity equaling $4,000. They did this via bank transfer, and that's going to be their charitable contribution. For this couple, we're going to say that they have an adjusted gross income, AGI, equal to $150,000. Okay, and we need to remind ourselves, because we're comparing the standard deduction versus the itemized deduction, what is for 2022 the standard deduction for married filing jointly, which is equal to $25,900. Okay, so we need to total these up. So for that interest on the mortgage, that is going to be equal to $16,250. For Jane's business, she can deduct her sales tax. Remember, you can do it up to $10,000. So of course, $8,000 is below that. Okay. And they have a charitable contribution to their church that they have documented through a bank transfer of $4,000, okay? And all told, that totals up to $28,250, okay? And as you can tell, that is larger than the standard deduction of $25,900. The problem is you don't save the difference between these two. You are going to save money because the itemized deduction is greater than the standard deduction, but it's not a savings of $2,000 or $1,000, whatever, with change, right? So what we're going to do is, what would the actual savings be? In this case, it would be roughly probably about $517 or so with the charitable contribution. So your actual tax savings, let me erase that here, your actual tax savings is only about $517, okay? So what do we need to do to evaluate? We do know that they are going to save money by itemizing their deductions. The question is the value of saving $517 worth the work? So what was our metric? Remember, if you decide to itemize your deductions, you have to keep a good set of records. Well, let's go through what the records are going to be. It's going to be a mortgage of 3.25% interest, which is $16,000. I almost guarantee you this record you could find online. So it's really not very hard to find your mortgage record. Additionally, she has sales tax of $8,000. Almost certainly she's going to keep records of these anyways, and I guarantee you this state's going to keep records of these anyways. So she'll have these records via online in some states or in hard copies anyways. Lastly, they did a bank transfer of $4,000 to a church, which, as we might note, a bank transfer is almost certainly going to be online anyways, or there's going to have some sort of hard receipt. So they all meet the feasibility in terms of ease to itemize their deductions. It's worth noting that all three of these deductions are going to be found on your 1040, Schedule A, and they're all going to be within that Schedule A. You don't need to attach an additional form or anything like that. Because this donation was not a non-cash contribution, it was a cash contribution, all she needs is documentation, and they'll be able to put that all on Schedule A of the 1040. Okay, so in this case, I would say yes, it's worth going to go get that $517. However, there could have been a scenario in which these were not so readily available, and it would have been a pain in the butt to only save $517. That's something that each individual couple or person has to evaluate when deciding to itemize or take the standard deduction. Because remember, this is pretty straightforward. If they were somebody that really didn't care a whole lot about that $517, they would say, I don't care. I'm just going to take my standard deduction and be done with it. And that's perfectly reasonable too. That's all. Thank you so much for watching.
Hi, thank you for joining us today on Tax Talks with Sam. I'm Sam Tutko. Be sure to subscribe to our channel to make certain that you stay up to date on the most current tax topics affecting your wealth.